Alright guys, so this is going to be a trade recap from, let's see, Friday, April 25th, 2025. So right here you could see the trade I actually took. Let's remove everything and then I'll just paint it out pretty much. Okay. So basically what we're looking at here, I took that trade at around 1:30 p.m. New York time, which was lunch macro. And right here we could see this is the start of New York, pretty much right here. I missed this opportunity in the morning at 9:59-ish in the first macro of AM session. I missed that opportunity. I didn't catch longs there. Other than that, we have a buy side liquidity up here, which is relative equal highs, which was in turn taken during New York lunch. So going into, let's go to replay, bar select. Okay, so this is what I was looking at going into PM session open. Basically, we have New York lows right here. Put my fib. This was the high. And basically, we just need the 0.5. And this is going to be our AM session consequent encroachment. So basically, this is where I'm looking, because usually we retrace during PM session. So that's kind of where my eyes are looking at right now. So going in, we'll play a couple more candles. There we go. So we put in the high right here. And I'm looking for some sort of sell side liquidity that I could be targeting. So right here, I see we have relative equal lows. It's on a 1 minute, but this will be our sell side liquidity slash relative equal lows. And then I also see that we have this BISI right here. That's another target, because I don't want to target for these lows all the way down here due to the fact that we already took out buy side liquidity. So I want to target internal range liquidity. And this is our macro time that we can expect price to take out some sort of liquidity and go back up in the opposite direction. So far, this is all I have looking at my PM session. So let's go a little further. See the next candles, and bam, I see this displacement. It's going through this low, but realistically this is our market structure shift right here, bottom right, and we'll make that black. This is our market structure shift, and this is going to be our sell side inefficiency, buy side imbalance that we're looking for. And it's also going through a low, which is good. And then here we want to see the upper quadrants get respected pretty much. So bam, bam, and we're not going to extend it right. We'll make both these black. Actually, I don't need that, because we already have the one from here. So I see, okay, we have this SIBI right here, which is just a fair value gap, going through this low, which is a high probability fair value gap. It's inside a time 1:30, so it's the first presentation fair value gap of PM session, and we have a market structure shift. So all indicators that I should go in. So right here is basically where I want to sell, put my stop loss at the high, and my take profit is going to be at these lows. Something else that we also have down here that could be a target or is another reason that is a good reason to go short is we have the new day opening gap high. So basically we delivered buy side of the new day opening gap because we went up through it and above. And then now we want some type of sell side delivered onto the new day opening gap. So an easy target is a new day opening gap high. And that's another confluence that's down here. Realistically, I wouldn't be entering here. I would be waiting for price to retrace back up into here. So it does do that. There we go. I'm in. I got in right here at 19,524. So realistically, this would be a little tighter. And we are basically looking for the bodies to respect consequent encroachment and 0.75, leaving the upper quadrant open. So right here we play, bam, body respect. And then we have this tiny little inverse fair value gap in here, which once we inverse that, which we are doing right now, was another confluence. And then bam, right here. Now we have this gap right here, which is going to be our breakaway gap because we do not come back inside of it. Let's get rid of this line. And this gray shaded area is going to be a daily SIBI. So, bam, we get this fat candle. Looking to see if we are coming back into it. By the time we get this candle, my entry is right here. And I just moved my stops to break even. That's basically break even of the actual trade that I took. So move stops to break even. Now we're in risk free. If we inverse this big imbalance that we just created, obviously I don't want to be in this position. That would mean I'm wrong. And we just let the rest play out. We have this big wick that I also want to see respect the bottom half of. So bam, this is going to be our premium wick. So basically we want to get under it, tap back up, and then that'll be basically something that'll send us down. So right here we get under it, tap back up into it, and then let's see, there we go, tap back up into it, tap it one more time, and then our TP gets hit. Now, another thing that I want to point out here is once we get into this macro time, our lunch macro time, I didn't take this trade, but I didn't take it because I already took a trade for the day and I don't overtrade. This was another opportunity that was basically an A+ setup. We take out sell side liquidity. We're inside of macro time. And let's let this play. There. So, bam. Price goes back up into it. We go for longs. Stops there. And our TP is going to be buy side liquidity of the day. So that's our daily high. So it's pretty much the same thing. Let's get rid of these. We have this BISI, buy side imbalance, sell side inefficiency, going above this high. So we have a change in state of delivery. And we're inside of macro time. And we have our target knowing that buy side liquidity for the day due to the fact that we are below consequent encroachment, which is right here, below consequent encroachment of the day, which is good to take longs in. And we just took out relative equal lows. So after taking out relative equal lows, we can look for buy side liquidity. So we play out, come inside. This is now going to become an institutional order flow entry drill because we left all the bottom quadrants open. And then we have a small little breakaway gap right here, not too big. And then we just let the rest of the afternoon play out. It's going to be a little choppy, but with our patience, We can also move this to break even now, because if it comes to our new day opening gap, we don't, to our breakaway gap, then we don't want to be in our position. We'll let it chop, still in profit here, let it chop, and then just wait for the last hour macro pretty much. That's when price runs, and as you can see, price is running here. Last hour macro for the end of the day, and we get hit right there. So we can exit out of replay mode. I'm filming this on a Sunday. I took this trade on a Friday afternoon, so my executions aren't on my charts right now, but I'll pop up another picture that I took on my phone of the execution, so I'll just put it somewhere on the screen. But we were up a decent amount of money on the day. Missed the trade AM session, but this basically just shows you can take two different trades in the PM session. You could take the trade going down towards the sell side liquidity that is going to propel your trade for the macro to go up towards buy side liquidity if conditions are right near our consequent encroachment of the day. You don't really want to take longs unless you're PM. You don't want to take longs unless you're at consequent encroachment of the day or somewhere near there. Or you could take the second trade where it's actually within the macro going up towards your buy side liquidity that was the initial buy side liquidity that you took shorts near. But that's pretty much it. Trade recap for Friday, April 25th.